Hello everyone, Stephen Barrow here from Halcyon, bringing you our fourth episode of our Halcyon review. We thought we'd kick off with just a review of the Australian share market over the last couple of weeks. As Brendan mentioned in his last update, the market was about to enter into earnings season where a large number of companies announced their profit results. That has largely been in expectation with what the market was expecting. From an index level, you've seen the market trade within a very tight range. So overall expectations from what companies have announced hasn't caused the market to move either way very dramatically at all. Though within that there has been a couple of major announcements, and we thought we'd just touch on the BHP result, which I'm sure you've already seen. BHP announced their largest ever corporate loss, but actually the share price rallied off the back of that, and we had a few clients ring and question why that was the case. Simply it comes down to expectations versus what was actually announced. With a company like BHP, which is well researched and news is factored into the share price daily, the market knew about the Samarco mine disaster in Brazil and also knew that the company was writing down the value of its shale oil assets in the US. So the expectation was that they were going to announce a loss, and what was actually announced was slightly better than what the analysts expected, so the share price rallied off the back of that. Plus you've also had the company, and what's more important to the share price is the expectation of business operations and earnings over the next 12 months. So yes, there was the headline of the loss, but that was well and truly factored into the share price, and it's what happens going forward that's more important. The other or the other reason for mentioning BHP is that Woolworths announced this week, and again, you're going to see a headline in the paper where Woolworths will report a loss, notwithstanding that their actual profit from the supermarket and their other businesses will be in the range of 1.5 to 1.6 billion, but once they write down the value of masters, etc., there will be a headline loss that will be announced. Again, that's well and truly factored into the share price. What's going to be more important there is what management's outlook are for earnings over the next 12 months. Also, with regards to share market news, Telstra announced a share buyback in their recent announcement. We'll look at that. It doesn't open until September and close at the end of September. Typically these share buybacks do favour clients in certain tax positions, but we'll look at that across the board and let you all know with regards to any action that needs to be taken. It's also worth just pointing out too, from the recent announcements and the declaration of dividends, that overall dividends have been maintained, which is important, especially in this low interest rate environment, so that's been a good outcome as well. The second issue we'd like to just touch on is we recently sent out an email with regards to BT Wrap and the annual statements. BT Wrap, as a quick recap, are changing the way that they send statements as opposed to paper copies. They're now making them available through your individual investor log-on accounts. So we've had a few clients contact us to request new passwords, etc. So for any of you that haven't accessed your BT Wrap online account and want to do so and have forgotten your password, don't hesitate to contact us. It's very easy for us to get a new password from BT Wrap, reactivate the account and give you instructions on where you can find those statements online. In the last update, Brendan mentioned the interest rate cut, which had been announced at that time, and whilst the focus typically is more towards what does for term deposit rates, clearly it also affects those with mortgages. So whilst we know from headlines that a number of the banks, virtually all the banks I think, didn't pass on the full rate cut, from a couple of discussions we've had with a few of the mortgage brokers we deal with, they've been saying to us how competitive it is there for mortgage rates. So whilst those of our clients that have mortgages, we would certainly strongly recommend, if it hasn't been reviewed in the last 12 months, that you either contact your bank or contact us and we can put you in touch with someone that can review your loan. Or if you don't have a loan, but say your adult children have a loan, then certainly please don't hesitate for them to give us a call. We'd be happy to put them in touch with someone that can review their loan for them. For those of our clients on the age pension, I know we would have discussed with you the upcoming change to the asset test threshold from 1 January 2017. That is going to impact clients, especially those that are getting a part pension. Either may lose the pension or see a reduction. We'll continue to be in touch with you in the lead up to January in terms of what can be done to reduce the assessable value of the assets, and also once the thresholds are known, to give you an idea of where you sit and potentially what your entitlement will be going forward. So for all of those clients, we'll continue to communicate with you around that issue in the lead up to 1 January 2017. Finally, in the last review, Brendan mentioned the referral competition that we're running, and as we always say to any of our clients, it's the best compliment Halcyon can ever receive is to get a referral from an existing client. As you know from our review meetings, we do always talk about referrals. So in the last week or so, we've had one new client referral that Dan Coleman received from one of his existing clients, and that client has now also been placed into the draw for the end of year competition. So we'll continue to talk about client referrals. They're, as we said, the best compliment we can receive, and we'd love to get as many clients into that competition as we can and draw it at the end of the year. Well, that's it for this review. Thank you for your time and watching, and we'll talk to you again soon.